All right, sir. Use of financial documents, case study, park forms, managers and employees. Acha ji, so the financial documents that we have studied, we also know, so it's a crossover of two topics, let's say the topic of the stakeholders in a business, and secondly the topic of financial information, the financial statements that a business prepares. So what we are going to cover in this topic actually is that how these different groups of stakeholders in a business, they use the financial statements of a business. Okay, so first of all, quickly going through the stakeholders of a business, they are the owners slash investors. They are employees slash managers. There would be government. There would be community. There would be customers, suppliers, and there would be the community around the business. Acha. Now, uh, let's begin with the let's go through in the sequence in which these things they're given in the book. Let's see the owners, sorry, the employees and the managers. Would they find the financial statements of the business of any use, and how would they use these financial statements? The managers and the employees. Let's begin with that particularly. Hmm. So managers, the concept is that these managers, they are made custodians of the business by the owners of the business. The owners, they themselves are rarely involved in the running of the business, especially the big corporates. So they have made these managers the custodians that you run this business on our behalf. So now they have been made responsible. How would they themselves check if they're doing a job right or not before getting a check from the outside, from the some reprimand from the shareholders or some praise from the shareholders? They would be looking at the financial information themselves. They would themselves calculate all these ratios and they would see if they're running the business in a profitable manner or not, or if their efficiency is improving over time or not. Okay, because they are responsible for day-to-day running of the business, so they themselves like to assess whether they're executing this job as per the requirement or as per the standards or as per how everybody else is doing in the field. Is their performance at par with them or not? So that's how the managers. Acha, what would another important thing for employees, anything that employees would use the same for managers as well, what else could they use these financial statements for? Something from the topic of HR, or let's say something from the topic of, to be more precise, what's that called, remuneration. remuneration Remuneration, the pay people get from where they work. Achha, the bonuses of employees and managers, they are usually tied, they have got a component of their pay which is called performance related pay. Do you remember? Performance related pay, the bonuses, performance related bonuses. So you'll get this bonus only if you achieve this target, right? So how would they see whether they have achieved those targets or not, or whether they're entitled to those bonuses or not? Obviously, those are usually the sales figures or market penetration figures or something like that. So that information, whether they have achieved all those targets, they usually have some quantitative element to them. And the most reliable source of the quantitative data of any business is its financial statements. So from the financial statements, they'll be able to see whether they have hit the revenue targets or the profit targets or not. And as a result, can they expect the performance related pay or not? Number one, even if there were no performance related pay per se in the agreement, if they see that the business is improving, its profits are improving, its profitability is improving over the period of time, they definitely expect from the owners of the business that since we are helping you improve these we are helping you achieve these improved results, we should get some reward from this as well, right? So that is why for their own rewards they'd also be looking at the statements of different financial statements, statement of comprehensive income statement, or statement of financial position. All right, make sense? Anything that confuses you, or you don't understand? Okay. What about the owners and the shareholders? What would they look at the financial statements for? What figures? So, for example, you are owner of a business. You just got the set of financial statements of your business. What's the figures that you'd be interested in looking at? Hmm. Excellent. So you'd be interested in the cash flow, that where actually is the money getting spent, and what else? Hmm. Hmm. So you'd be looking at everything in the financial statement, starting from the assets. You'd like to know what are your total assets in the business. You'd like to know how much you owe to external parties. You'd like to know that what are your net assets, as in from all these assets, if you pay off the liabilities, what's the remaining investment that belongs to you in the business. Secondly, you'd like, if you go to the profitability part, you'd like to see that what are the profits earned, what are the gross profit margin, what are the operating profit margin, is the business, can the costs be controlled, whether those be cost of goods sold or whether those be operational costs. Can I, is there a way I can control those? How are my results compared to other businesses? So using these assets, how much return have I generated and how much return have other businesses generated? So they'd be looking, since it's their money primarily which has been invested, and since they are the ones who have taken the risk of running this business by investing their money, they'd like to see how well can they improve on this risk, as in how can they generate even better results for this business. Okay. Okay. Moving on, we have got external stakeholders. For external stakeholders, let's say we discuss banks, customer, suppliers, and government. Hmm. So for banks, if banks were to use the statement of finance, why would the bank of a business ever consider using their financials? Excellent. So if the business applies for a loan, how would the bank judge if the business, what financial statement and what figures in the financial statement would a bank look at to assess the loan worthiness of a business? Hmm. So first of all, the first thing you identified, right? The first thing you identified, right, that how much does the business make? Are they left with enough profits each year that would help them repay the loan? Or is there profit? I mean, if the at the end of the year there is no profit left, then how would they repay the loan? So the business, it would be the bank, it would be interested in both financial statements, the past ones, which we actually call the financial statements, as well as the projected financial statements. That yes, once you get this money, where would you spend it? And after getting this loan, what would be your profits? And then they would look at the incremental profits, the additional profits that you get once you are taking my loan. Is that incremental profit enough to pay back my loan or not? Okay. All right. Anything else that the bank would also like to see? How many other liabilities have you already got on your books? All the previous loans and liabilities. If there are already too many loans and liabilities, that would also raise red flags for bank whether we should lend them more or not. Because they've already got all these previous liabilities. In case something happens, who would they pay first? Them or us? Are they in a position that they'd be able to meet all their liabilities? Or are there any signs that something could happen that the liabilities they won't get paid back? So yes. What else? So that's for the bank. What about the suppliers and the customers? Would they be interested? Would they have any useful information in the in the financial statements of a business? Suppliers, sir. What would suppliers do with the dividend? Hmm. So the first thing they'd be looking at is, so this is a business. Shall I give them credit or not? So if they're buying goods on cash from me, fine. Not really a need to look at the financial statements of the business. You're buying goods from me. You're paying me with cash right now. Fine. Buy as much as you want to. But if you're asking me for credit, I'll have to check whether you'd be able to pay back this money later or not. Are other are there other businesses as well who have given you credit or not? Or is it just me you are asking for this credit? Okay. All right. Just a second. It was here. Anyhow. Acha ji. Acha ji. What else? What else? What else? Acha ji. Customers. हाँ जी, customers. Would the customers be interested in buying, in looking at the financial statements of a business? They won't. Acha, customers, first of all, looking at the financial statements, it would give them an idea of how much profit the business is extracting from them. So all the profitability that the business has got, especially the gross profit margin, there was some cost that the business has incurred, and on top of that cost, they charged me a price and they earned a profit, right? So it's actually customers who are funding the profit of the business. Do you agree? So they'd like to see that how much profit, for example, is being extracted out of them, and and that then depends on whether customers they are a stronger group or the business itself is strong. So, for example, I wonder if you have ever looked at the financial statements of a business ever of from where you buy things. So all the gadgets that you have got, PS and everything, did you ever look at the financial statements of any of those businesses? I doubt if you ever have. Okay. So you don't want to know how much profit they extracted out of you. Okay. So that's something that customers can, and obviously individual customers, they wouldn't have as much power as the business themselves. So other than them, if they together form a strong group, then maybe they can stage a protest or get to the negotiating terms with the business. Otherwise, I accept it would be difficult for them. I mean, in individual capacity, yes. Acha ji, financial institutions such as the insurance companies, they might also find the financial statements of the business useful. Acha ji. So this is the quantitative information that we are looking for in the financial statements of the business. Quantitative information is any information that is expressed in numbers. So an example of quantitative information is profit of a business or profitability of a business. Can you give me any example of non-quantitative or qualitative information of a business? So there are two types of information about a business: quantitative and qualitative. Quantitative is a sort of information that is usually presented in the form of numbers. Okay. So, other than quantitative information, is there an information which is not quantitative? Any example of qualitative information of a business? Hmm. Customer loyalty, for example, brand loyalty, customer service, brand loyalty. Similarly, employee satisfaction with the business, right? These are all matrices which could be important for a business, yet there's hard to put a number on it. Okay. And these could be useful for the business as well. So that would be qualitative information. I wonder if they get down to the qualitative information. And when somebody asks you what is the maybe we went through it, but one of the shortcomings of using the financial statements of a business is that it focuses more on quantitative information and you get little qualitative information from the financial statements of the business. So, for example, these three pieces of information that we just discussed as example, they're never there in the financial statements of any business, right? Because these are qualitative pieces of information, and financial statements deal with just the quantitative aspect of things. Acha ji. So the type of decisions that we would base on the financial statements is, first of all, the example given over here is funding decision. So funding is that if you want to fund a particular activity. So for example, you have a business and you want to start a new activity. Where would the funds for this activity come from? Should there be internal source of finance or should be an external that we'll have to see from the financial statements. Are there enough money available in the form of internal source of finance so that it can be used? Or if there isn't available, then the question just dies there. The financial statements they'll tell you. Similarly, if you want to go for the external sources of finance, should you go for microfinancing or should you go for short term finance, medium term finance, long term finance? As in, for example, should you go for just a bank overdraft or a bank loan? Both are liabilities that you get on from the bank, but both would have different implications. Similarly, if you're going for a large fund, I mean, you want to take out a huge sum of money, should you go for debentures? Should you go for a loan? Or should you go for more shares in the business, equity? Okay, so these are all the finance or investment decisions from the investment in the sense funding decisions for the business that where should they get their funding from? And we have already discussed above that how business chooses different sources of finance, right? When we were discussing the chapter of different types of finances that are available to a business. Do you remember that? Sources of finance. Excellent. Acha ji, the next thing that they would look at in the financial statements is, as you pointed out before, for the owners, reducing costs. Where in the business is there room to reduce cost? Okay. For the goods being produced in the production procedure, is there room to reduce cost? Uh, hmm, hmm. So reducing cost would mean, so for example, can I buy this material from a cheaper source? Can I move my operations to a country where labor would cost me less? Okay. Can the same activity be done by having fewer people on my payroll? Is the marketing campaign, the types of marketing campaigns that I'm engaged in, are they really beneficial for the business or not? But the reducing cost portion, it should always be proceeded with caution, for the reason that if you're trying to get better on quantitative aspect of things, yes, reducing cost would have immediate effect of increasing the profitability. You have to look at the long term results as well. Would it have an impact on quality or not? Cheap raw material, yes, immediately costs would drop down, but so could the quality. All right. So yes, we are all for reducing cost. You could always cut down the number of employees by a few percentages, but what effect would it have on the morale of the remaining people who are working? What effect would it have on the workload of the remaining people who are working? Would it become too unbearable for them, or would it still be manageable for them? So this is something that you have to look at. Acha ji, increasing profitability. Yes, you're generating profits. The first aim is to increase profits. You want to generate more profits. That's fine. But then, initially, when you generate more profits, you put in more resources as well. So, your business, it's inputting more resources, and as a result, the business is generating more profits. Later, what you want to do is you want to now increase profitability, as in with the same level of resources you want to generate more profit, or per unit of input you want to generate more profit, per unit of for example, per money, per rupee invested or per dollar invested in the business, return on capital employed, you want to increase that. The operating profit margin, you want to increase that. The gross profit margin, for the same cost of goods sold using the same materials, you want to increase your profit. So that would be improving your gross profit margin. Using the same managerial resources, you want to increase the profit that your business is earning. So you want to improve the operating profit margin. So again, looking at the financial statements, it could help the business identify that. Acha, investment decisions, the business, it would be able to see that what investments it currently has made and how much return those investments are generating. Is that good enough for the business, or does the business want more? Number one. Number two, the other investment decision that they can make by looking at the financial statements of the business is that how many vacant assets are just lying around. Okay. Hmm. If there are, for example, too many current assets we discussed before, more than their current needs, they should perhaps consider converting them into non-current assets which generate returns more for them. Okay. So both, you want to see what the investments that you have already made, can you switch to better investments? Number one. And number two, using the resources that are already there in the business, can you increase the investments or not? Acha ji, the governments, they also make use of the financial statements of a business for what? हाँ जी, number one, it's for taxes, and what other use could they use it for? So it's here is something which I wonder if you have discussed before, that it's also part of the government, it's also responsibility of the government to see that the market is competitive, and there is no single business which is making their market share bigger and bigger to the extent that it starts monopolizing, and it starts for example manipulating the customers, because it has got so much market power. Okay. So to maintain a level of competition in the market is also responsibility of the government, and they've got multiple rules for that. Whenever a business it makes new investments or it enhances its operations, there are certain procedures with the government that they have to go through. Acha ji, competitors, can they make use of the financial statements of a business? So for example, you are CEO of Coca-Cola, could you make use of the financial statements of Pepsi? All right. So compare yourself, your own performance with their performance. अच्छा जी, auditors, we have discussed auditors, they would uh, they would have a responsibility. The business itself appoints the auditors, but the auditors, number one, they have to be independent, and secondly, once appointed, they would have the responsibility to check the financial statements of the business whether they have been made as per the rules, which are usually the GAAP, generally accepted accounting principles, or IFRS or IAS. So the rules which the business says that it's preparing the financial statements on, are the financial statements actually being prepared or as per those rules or not? That's the job of the auditors to check. So they'll be using the financial statements for that. Acha ji. Media. So there are different, for example, there is this channel Bloomberg, there is this channel CNBC, and there are other CNN and all these which have a finance segment. Every news channel also almost always they have a finance segment, and they'll have to report on the updates in the in the industry, different industries. So they'd be using the financial statements of the different businesses to comment on those, to comment on the state of affairs in the commerce industry and everything. Acha ji, the registrar of the companies is the authority which actually registers all the um, if you are a business and you want to become a company, you have to submit your what's the articles of association and memorandum of association with the registrar of the companies to become a company. So registrar of the companies is the authority uh, over the companies, the incorporated businesses. So usually there is a liability that whenever it's written in the law for these activities, if you are going to go ahead with them, you have to give a notice to the registrar first. So for example, one of the requirements could be that whenever you have a financial year close, you'll have to send your financial statements to the registrar of the companies as well. Okay, and then through registrar, or mostly it is through stock exchange, but here it says that through registrar, these financial statements of public limited companies, there is a requirement that if anybody in the public he wants to access them, they should be able to. So back in the old days when the financial statements they weren't put on the internet, you'd have to physically go to these offices and you could buy a copy of the financial statements of the business by paying a certain fee or a certain amount. Now the businesses, what they do is they upload all these files online for the public to access. All right. Hmm. They are a public limited company. Their shares are being publicly traded. If you want to raise money from the public, if you don't want, if you're let's say more careful about your privacy and you don't want people to comment on your or to know your profit or profitability or your business activity, stay a private limited company. Hmm? All right. But if you are in the in that realm where you're raising money from the public, now you have to present your information to the public as well. Okay. Acha ji. That's it for this chapter. That's it. Let's just go through the MCQs, case study you'll do as homework, and in the class remaining time we'll solve some past papers. Okay? MCQ, sir. I think the answer could be all four of them. Owners, if I were owner of a business, I'd be looking at everything. So yes, profitability. Market share perhaps is it's not disclosed in the financial statements. There is no requirement to, and the financial. So for example, you're supposed to tell what are your assets, what are your liabilities, what's your equity, what's your profit, what's your revenue, what's your expenses. You aren't supposed to tell what is your revenue as compared to the whole industry. In the other information, some businesses they do, but usually it's not a requirement of the accounting standards. So yes, profitability might be a better answer considering everything else. Or if a business is more concerned about the cash flow as compared to profitability, they could say D. All right. Question two. Hopefully, all the things that I'm saying and the speed at which I'm saying this is not confusing you. Okay. 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 Correct. Creditworthiness for two. Correct. C. Name for last one.